There we go. Back in action. All right, now y'all know I'm here for a good time, not a long time. And I know this thing is crooked as hell. Let me try to get right there. All right. Hey, Ludine, I seen you first in action, so I'm gonna say hi to you. For the people that new to the scene, hey, Ludine, how's it going? For the people that's new to the scene, just please ask any financial question, political question, all those questions that you may have, and I will hit all the questions at the end. Of course, I go through my diatribe of what's going on with your money in the past week and things that I see that's coming down the horizon in the future. With that being said, I was asked to keep the trolling to a minimum, but I know people are going to be people. The internet's going to be internet, so don't worry about that. But yeah, ask all your questions. And it don't matter what spectrum it is, as long as they can tie it into finance, I will happily answer that question to give you a better understanding about your financial future. All right, let's get it in. I know some people probably saw this thumbnail about stimmy checks and all that, but we will hit that. But let's talk about what's been going on that really affects your money, not the thing that the media is talking about. I'm talking about the everyday person affects their money. First up, Trump and his beef with Jerome Powell, the Federal Reserve chair. It's a nothing burger. Only reason why I'm saying it's a nothing burger, will Donald Trump actually try to fire the Fed chair now? No, it won't make any sense. And the reason why it won't make any sense, because his term is up in May of next year. So let's just think about it. Let's go through this whole hypothetical system. Let's say August 1st, he axes him and he fires him. Of course, it's going to be an inquiry into that. Then he have to go do interviews and then have to find somebody else to hire. But then that person, whoever he chooses, has to go through a selection process through the committees that be for the new Fed chair. That takes months. He'll be done in February or May of next year anyway. So what will even be the point? Now, what side am I on this fight between the Fed chair and Trump? Because I know, Trump, he wants to lower the interest rates. He wants the Fed to cut the interest rates, and the Fed is not ready to cut the interest rate. I am 100% on Jerome Powell's side on this one. I 100% believe that the Fed needs to keep the interest rates where they're at, because I believe if they drop them drastically, it will cause more inflation. I think it needs to stay higher for longer to just weed out the system, let the system work itself out. Because remember, the Fed was late when they cut the rates, and then they said it was transitory, and they was late to raising the rate, and it caused all this inflation. I think if they get too hyper, get too aggressive cutting the rates now, I think it will be a repeat. But I think interest rates at 6%, especially on the housing side, but the interest rates where they're at right now, the Fed funds rates where they're at right now, I think it should stay there higher for longer, at least till the rest of this year. So I am on Jerome Powell's side on that aspect of it. But I understand why Trump wants the interest rates cut, because our debt is paid back based off the interest rates that the Feds have set. So the more debt that we have and the higher the interest rates, the more interest payments we're paying as a collective, as a country, for our weekly, monthly, 10-year, 20-year, 30-year debt that we have out there on the market. So I understand both sides, but I believe for the U.S. consumer side to wash out a lot of this overhyped money, the helicopter money that came during COVID, I think interest rates need to be higher for longer. Something that's really not money related, but I know people heard about it, Obama and election interference, that it don't mean nothing to me. I believe Trump, I think when Trump went to the Supreme Court and they said a lot of the things that a president does while they're president cannot be prosecuted, there it is right there. When the Supreme Court agreed with Trump administration with that, I think that will cover him. Now, do I think the act was egregious? Yeah, but I don't think that nothing's going to come out of that. So stop being distracted by stuff that don't matter to you. A new law came out. And I know a lot of people, they don't know this law even exists. But a new accredited investor is not a law. I mean, it's trying to pass it through Congress. I think it passed the House, still has to go through the Senate. Accredited investor. Accredited investor, just so people know, hey, Wisdom, Whiskey, and Wit. For people that don't know, Wisdom, Whiskey, and Wit, I believe next Monday, I think we'll do the recording this upcoming Monday, and then the following Monday, I will be on that podcast. Great guy over there, Starsky. Hey, everybody, please go to that channel right there. Click that link and hit that subscribe button on his channel. He has some good information. He has some good guests on there that's really bringing it, especially people that's in corporate America that's trying to, move up that ladder, want to know what leadership is and things like that. That's the channel to be at. They giving you nuances and insight that you're not getting pretty much anywhere, especially on the web. So please hit the like and subscribe button on that Wisdom, Whiskey, and Wit. But yeah, I should be on there in about 2 weeks or so. But back to accredited investor. Accredited investor, they what it is to be an accredited investor, you have to have $1 million in net worth minus your home, plus over $100,000 in liquid cash. And then now to be an accredited investor, that is the prerequisite to becoming, well, not to becoming, excuse me, to be an accredited investor. That is the prerequisite to get in a lot of these early stage companies, to invest in a lot of these early stage companies. So what I mean by that is Tesla. I'll just use Tesla. Tesla, for instance, when they were doing their early rounds of investing, it was only available to accredited investors. All these new companies, like you hear around rappers and actors, they all in these VC funds and stuff like that. It's because now they're accredited investors. But the new law that's out there, it will base accredited investor because they want to open the market to the more normal everyday people. They want to change it to financial literacy based on versus net worth. Meaning that you will have to take a test, a financial literacy test, to become an accredited investor. Now, will the law pass? No. Do I think it's good? Yeah, but I think the first hurdle was still good enough, because to have $1 million net worth minus your house and over $100,000 in cash, that means you had to do work. That means you had to put in to get there. And I know some people that's sitting here that don't know no better, they're going to say, oh, or their parents could have gave it to them and now that made them an accredited investor. FYI, people, 86% of millionaires in the United States today are self-made. 86%. So when y'all get mad at trust fund babies and all that, that's only 12 to 14% of Americans, or millionaires, excuse me. But 86% of millionaires are self-made. Billionaires also, self-made. This is not just stuff handed down. The Rothschilds, the Rockefellers, okay, I get that. But most of these people that's making the money, they putting in their time, energy, and effort, sacrificing all the BS, not doing all the BS, and focusing to get to that level. So will the new law help? Yeah, it'll get more people that don't have the money into the system. But if they're lucky enough, or if they scheme the system enough to pass the test but don't know what the hell they're doing, then there's just more money in the system getting wasted because people just going to be throwing random money in places they don't know what the hell they're doing. But I think the proof in the pudding, if you can accumulate $1 million net worth and have $100,000 liquid in cash, I think that's the biggest test of all, to say if you're accredited, if you have knowledge about what investing is or what saving is or however you accumulate the money, but you do have knowledge. What else going on in the media? We got the Trump administration is trying to get no tax on capital gains for when you sell your house. No tax on capital gains when you try to sell your home. But so for people that don't know, and this is only for personal residence, this is not for investment properties or what have you. How it works is this. It works in a format of, if you have a house and you just single, let's just go single, you have a house and then you get $250,000 in profit on the home when you sell it. So let's say you buy it for $100, you sell it for $350. You do not have to pay taxes to the IRS for the capital gains that you've made on the property. And then it's up to $500,000 if you're married. But anything over that, you have to pay taxes. I mean, I know a lot of people say, "Oh, I ain't gonna never get that much money in profit from a house," but just let you know. But the Trump administration is trying to no tax on capital gains for home sales. So that's out there also. As far as the trade front, Canada and a lot of people in Canada, they are more patriotic than Americans because when the whole tariff thing happened, Canadians said, okay, we just only gonna buy Canada. Americans said, what the hell is wrong with the president? But Canada got tariffs on everybody, but when somebody put tariffs on Canada, it's a problem. But Canadians said they still ain't buying American products, which is fine. Which is fine. And for people that don't know, these countries need America because unfortunately America consumes more than 3 times. America consumes more than 3 times. Sorry, I was reading the comments trying to look for trolls. But America consumes more than 3 times than the world combined. So the reason why countries need us is because they need to offload their products in our area. But salute to Canada for being patriotic. A lot of people in Canada said they will not buy American products. They will stick to Canadian products. If Americans did that, then our prices would be super low because a lot of people wouldn't have entry into our country as far as our markets. But we don't. And of course, Canada is not looking to say, "Oh, well, if the American price is cheaper, then we're gonna go with American." They just said, "No, we loyal to our country, and we will fight this battle to the end." So, salute to Canada on that. Even though at the end of the day, they will not win in this endeavor because Canada need us to consume their products way more than we need them to consume our products because, of course, we consume way more. So if people wondering why all these countries come in all these trade deals, is because we have the propensity to spend all of our money, and we will spend all our money gladly with them, so they know where to make all their money from. And I know some people say, "Oh, well, they can go sell in India." India is not buying it. They could have been went to India if the demand was for their product was in India. And remember, India, China, they have 2, 3, 4, 5 times more people population than the United States. They could have been went to those countries if the demand was that high and it was so easy to enter their markets, but it's not. That's why everybody wants to sell in the United States because they know the U.S. citizens have a propensity to buy everything and they can make a huge profit by doing it. So, actually, consumer, the United States have the upper hand in this battle. Just like I tell you as a consumer, you have the upper hand when you go into stores and stuff like that. If you stop going to buy everything, then demand will prices will go down because demand has dropped. What's another one out there? All right, I'll go to the one that a lot of people want to look at. These Trump stimmy checks. Yeah, Trump did bring down the ideal of producing more stimulus checks or giving out more stimulus checks for a certain income threshold in the United States. And his reasoning behind that said there's so much money coming in from tariffs that he can give some back to the U.S. people. Now, I know everybody that bitch, moan, and complain, they not going to not cash that stimmy check if it do come to them, which I don't have a problem with. This is going to be the problem. For just FYI, for me, I am not a fan of stimmy checks at all. It's not because I don't get one. It's not that. It's because look at what everybody did with the last 4 or 5 stimmy checks. People say 4 or 5. Yeah. Biden did 2. Trump did 2. Obama did 2. So that's 6. So this would be the 7th stimmy check in the last, 15, 20 years? What happened to him before? I mean, literally, people that I know who never cooked more than ramen noodles before, they on Facebook, IG Live, they doing everything. They got lobster, steak, and shrimp on the grill when they was giving out PPP loans, enhanced unemployment, and all that. Only thing that's going to happen is the stimmy check's going to go to people that make under 150, maybe 200,000 married. And then they're going to give all the money to people, unfortunately, like me. They're going to take the money and then they're going to say, "Oh, I'm going to go to the store and buy extra stuff at Walmart, go buy extra stuff at the grocery store." The investors win. Because the investors are already in the asset. You go drive the demand, the price of the asset is going to go up. If you say, "Oh, I'm going to sit here, I'm going to be smart, and I'm going to invest," it's only going to be so few that it will not move the hammer. But still, investors that's already in now will benefit again. That's how it works. That's the whole thing of it. It's like we waste money, but then this is the crazy part. People gonna look on this video and say, "Oh, well, you can't tell me what to do with my money." You're right, but this is what's gonna happen. The same thing that's happened every time they passed out a stimulus check. People gonna put rims on baby strollers. They're gonna go buy all the crazy stuff, and then after their money gone, the price of everything gonna go up because they drove demand, and then they gonna sit here and get mad and be like, "Oh man, y'all got the prices up, man. What's going on with the president?" No, it's you, the consumer. You, the consumer. Demand drives prices. So just look at it. That's what happened. So if you wonder why a bag of chips 20 years ago was 35 cents and now that same bag of chips over $1.50, is because 6 stimmy checks, enhanced unemployment, PPP loans, all that stuff came in and people just went and spent it all and drove up demand. Drive up demand means drive up prices. But the crazy part, when you run out of money, the prices are still going to be here. But Trump did say he's going to try to shoot for stimmy checks because of all of the tariff money that's coming in. So for people that's out there. Coming up this week, the things that I'm looking at coming up in the following week. Next week, the Fed's going to make a decision on if they're going to cut rates. I don't believe they're going to cut rates. The Fed funds rate, not all the rates. So Fed funds rate, for people that don't know, is the overnight borrowing rate up to like a month and a half. That's where they really have their effect on the interest rates. But when you start talking about auto loans, credit card loans, home loans and stuff like that, that is on a floating rate system. That's based on supply and demand. That has nothing to do with the Fed, even though the news media keeps saying it does. But we have shown data here on this channel many times to show that it has no effect at all. But the Fed decision, I believe, is next Wednesday or next Thursday. So that will be a market mover. If they cut rates, the market's going to move either up and down. If they don't, the market's going to move either up and down. But right now, the consensus, most people believe that the Fed will not move interest rates. And I am of that belief. They will not move interest rates. If they do, it'll probably be September, October. But I personally hope they don't do it at all. The jobs report comes out Friday, August 1st. Yeah, August 1st, next Friday, August 1st, the jobs report. And for people that don't know, the jobs report is talk about all of the jobs that was either hired or let go in the previous month. So the jobs report, they're expecting 115,000 jobs to be added in the month of June, not July. In the month of June, 115,000. They do expect the unemployment rate to go up from 4.1% to 4.2%. So, and the estimates before this was like 155. So they lowered the estimate to 115. So that's there. And then the other thing that will be a market mover will be on August 1st, the Trump tariff deadline. The Trump tariff deadline. So with that, will he hold serve and let those tariffs kick in? If not, then once those tariffs kick in, how will it impact the supply and demand on the supply chain as far as shipping and things like that? That's what we're gonna see. Will the tariffs just hyperly raise inflation? We will see. So those are the things that I'm looking for in the next week or so that will drive the market. Now, on just a personal stock note, on individual stocks that I'm looking at in the next week, 10 days. SMCI, they got earnings on August 5th. That is one of the bigger positions that I have built over the past, let's say, call it 6 months. So I'm looking for those earnings. I am expecting those earnings to be better. Of course, we know they had accounting issues and things like that. Another earnings that's coming out July 29th. That's next week. SoFi earnings. I have a huge position in there also. Then that's been built up over years. So looking to see what's going to come out there. Historically, SoFi beats on earnings, then the stock come tumbling down. But it's up there at the $20, $21 range now. So we'll see if we have the same event happen on this earnings on the 29th, which is a Tuesday. So we're going to see what they do there. And then I'll just act accordingly. If it comes down, they beat earnings, it comes down, I will buy more. But if it goes up, great, make some money. But I'm cool with it going either way. Oscar, that's the one that we started talking about a couple of weeks ago. Oscar, their earnings are on August the 6th. August the 6th. So that will put a lot of more information out there. Of course, with the big beautiful bill that the Trump administration passed, everybody think that Oscar is very dependent on Medicaid and Medicare, and that will affect their earnings. Well, we're gonna find out on August 6th. And then depend on what the conference calls say, not what the earnings say. What the conference calls say will be the deciding depending factor on what I'll do after that. And sale is not in there. It's just either buy more or hold what I got. That's really what I'm shooting for. But we'll see how those three things turn out. Now with that, so those are the things that was in the news. Now let's go try to hit up some of these questions. And Hayward Pittman, I don't know who you are. All right, T, it passed. Do you think that there will be ways around the test? Yes. And he's talking about the accredited investor law. Will there be ways around the test? Yes. I do believe that. I believe it's going to be because, United States are trying to move more into the 21st century. It's going to be some online test. It ain't going to be like no proctor exam in college where you got to sit there in front of the teacher. I don't believe. And I believe one person will pass the test that has knowledge in that financial realm and then pass it off to their buddies. I mean, it may be like 5-6 iterations of it or whatever, but I believe that there will be some kind of cheating and workaround on the test. I think the biggest test is money in the bank, but they're trying to go with this, and I think it's just to get more people to get more people's money into the market. I don't think it's really helping them because if they had the knowledge that they say they have over a short period of time, coming up with $1 million should not be that hard if you're 100% focused, I believe. And then what I mean, a short period of time. That's one thing I do want to talk about. A short period of time, and I talk about it in investing also. I always say, get rich quick is a 10-year process. The first 5 years suck, but it's about a 10-year process. I've said that many of times. A lot of other actual true people on social media, they said it also. Get rich quick is 10 years. And I know what people are saying right now. 10 years, oh my God. But you're willing to work 50 years and have nothing to show for it. So 50 years with nothing or 10 years with something. But the real truth of it is 5 years. The 5 years suck. 5 years, that's when you have that big nut of a lot of assets and stuff that you can go leverage and deploy. And then 6, 7, 8, 9, 10, you just seeing it all roll and you're like, oh, it makes a lot of sense. And then year 10, you're just financially free. That's something that people have a hard time grasping because we've always been trained since birth. Oh yeah, you get a job, you get a pension, you work 40 hours, you work 45 years, you get to 65, collect Social Security. If you want to do that, great. There's not a channel telling people, hey, you need to quit your 9-to-5 job. I just believe in having an option of if you're going to work or not. I'm never going to tell you, oh man, you need to stop working. Just have the option if you can work or you can't work. But yeah, T, that's a good question. But yeah, so that's something that's out there. Hi from the Philippines. No, you're not tax-free after 2 years of living in the house. You live, so the question he's asking is, he thought that you're tax-free after you live 2 years in the house. Yeah, you're tax-free if you're married up to $250,000 in profit. That's where it's tax-free. If you're married, if you're single, if you're married, $500,000 in profit. If you're single, $250,000 in profit. After you live in the house for 2 years. That part is correct. But anything over that, so let's say you just hit the Jackie Robinson home run and you got something for, let's say, $250, and then you somewhere like California, like I know some people from California who bought maybe 5-6 years ago, and then now the property is over $1 million. Anything over, if he's married or if she's married, then 500,000 profit, all that's tax free, and everything over you have to pay a tax on that. What else we got? Hi from the Philippines. I'm not a fan of the checks. I'm not a fan of the checks at all. I'm not a fan of the checks at all. It is because, and he said, the question is, and I'll now say it for people, are you not a fan of the checks or the people who misuse the funds? I'm not a fan of the checks because 95% of the people misuse the funds. I don't know how you want to splice that or cut that up, but, and it's not me, people say, oh, that's what you think. No, that's what I've seen. That's what I've seen. And if people open their eyes, they seen the same thing. Majority of the people that receive the check blow the money. And then the crazy part is people who have assets are the one that benefit. So I can sit here and say, oh yeah, Trump keep giving them money so I can make more. No. I see where it's going. I mean, I done seen people say, oh yeah, when that stimulus check come, then I have a down payment to rent at your place. I've seen it. And then what usually happens is they need a stimulus check to get the down payment, and then 3, 4, 5 months later, they can't afford the rent payment because, oh, they PPP or enhanced unemployment, or they quit their job or whatever, and then, so now they took the PPP money, they out on the streets, and then what? That's why I know I benefit from everybody getting the stimulus checks, but I wish people would do something totally damn different with them. What's going on with the Trump administration and the student loans? The Trump administration, that's a good question, Jay. The Trump administration with student loans, they have started garnishing paychecks because of student loans back again. I say that because this is a big topic we talked about on this channel for a long time. Especially when interest rates, during COVID, when interest rates was at 0, everybody thought that they can elect somebody that can eliminate the debt that they swore to pay back. On this channel, I talked about it the whole time. Interest rates at 0, that's your biggest chance to knock out a big chunk of your student loans. People say, oh no, I'm not doing that. My president is gonna eliminate my student loans. Now the president has come and gone, and then now you're getting your paycheck garnished, but you had an opportunity. But again, you had the stimulus. You had the PPP. You had all this enhanced unemployment. But nobody paid off the student loans. So it wasn't like they didn't have extra money. And of course, I know all those funds probably couldn't pay all of it off, but you could have put a major dent in it. But they didn't. I mean, literally, I talked to an owner of a rim shop in Michigan. He said this past 3 months, and this shop been open for 15 years. He said this past 3 months is the biggest revenue quarter we didn't have in any year this shop has been open. Rims. Not financial advisors saying most people open up retirement fund accounts. Not child care talking about, okay, we had the most people join in the child care or anything like that. Rims. Not life insurance people saying, hey, now we got more people going to life insurance to make sure they take care of their family if something was going on. And remember, COVID was going on and people was dropping like flies. We didn't see life insurance policies go up drastically. Rims. So that's why I'm not a fan of the check, because I know where the money's going. And people could be mad that I said, but that's where the hell it's going. But that was a hell of a question. That was a hell of a question, Jay, there. Yeah, people misuse funds. Okay, so any other questions out there? I was going to go into return on investment. How much time we got? Oh, we're still 30 minutes in, so I will do this. All right, so in my trip abroad, and it's funny, and that's why I always ask people, ask as many questions as possible. Actually, I thought this video was going on a little longer, so yeah, I can still hit this. I always say ask as many questions as possible because I've been at this for 15, 17 years. I forget some of the things that I went through during the early stage. So the questions trigger my memory to be like, oh yeah. I know a lot of people was just getting off the couch and just getting into the game. That's why I say Ask a lot of questions. Despise what the shirts say. There's no stupid question in finance because, like I said, I just came back from Japan and I had some conversations. And then I noticed one question that was asked was one of the reasons why I didn't want to get into real estate in the first place. And return on investment. And this was something early on that I had a big problem with because people think, and it don't matter when it comes to financial literacy, your education level, you could be PhD or you could be an 8th grade dropout. It's still the same. I mean, financial literacy is a different animal than formal education. Trust me, it is. But rental properties. So I was talking to a gentleman and he said, yeah, so I just bought this rental property, but now I got to see, oh man, how long will it take for me to get another property? Or how long will it take for me to get my money back on this property? And now I was sitting confused. And then I said, you know that your money hasn't went anywhere. So what he's thinking is, if I pay $100,000, I'm trying to figure out how long will I have to collect rent to get another $100,000 to say that the investment was worth it. That sounds good, but that's not financial literacy. And I had that same question until somebody broke it down to me. The truth is, if you buy a house for $100,000, that's an asset. Every rent check you get after you buy that home is a profit. Of course, with the caveat that you bought the home right and the $100,000 was the actual value of the home. Every rent check you get after that is a profit. Why? Because the asset still holds the money. You can still get the money from the asset and keep the asset. You could refi, HELOC, and get the money out and still keep the asset. So it don't have to be, hey, I put $100,000 in here, so wait, I gotta collect rent for 10, 15 years before I get the $100,000 back so I can deploy it again. No, you already have that. You have the $100,000 here, and then that first rent check, let's say it's $1,000, now you have $101,000. And then if you hold the property for a year, the average return on real estate is about 3 to 5% unrealized gains. So at the end of the year, if you hold it for a year, that's 100. And I mean, so what's that? $12,000 in rent, and we of course we know it's expensive. $12,000 in rent, $6,000 in appreciation. That's what, about $17,000? $117,000? That's what you have. It's not all or nothing. And then even the people that put 25% down, and it's called ROE, that's return on equity. ROI, return on investment. It's what you're trying to do. It's a hurdle rate. So if you put your money in just a national bank savings account, that's 0.05%. So that's less than 1% that you'll gain in interest. If you put it in a high yield savings account, you get about 3 or 4%, maybe 5% in some cases, if you're in SoFi. Hint, hint. But that's where it's at. I mean, you could go T-bills and treasuries. That's about 5%. If you don't want to go super long term, that's about 5%. So your hurdle rate is, you're looking for, if you're going to take more risk than the safest investments out there, you have to have a higher return. So if you only want 5% return, if you only want 5% return, then stay in high yield savings. Now 5% return is barely beating inflation, but if you want to be safe, then you're going to get a lower return. But if you going higher, let's say rental properties, let's say that's the closest safest, I would look for a 10% cash on cash return. That's it. You know, stock market, you're looking at 12. Crypto, you better be looking at 20 to 30 because the risk gets more egregious. So let's say same $100,000 house scenario, you put down $25,000 on a $100,000 house, and then you still collecting the rent. You just looking to get at least 10 to 12% ROI on that money. At least. So that's, the rent minus expenses, minus management, minus fees, all that, taxes, interest, debt. And then the return has to be something on the down payment, not the $100,000. So it has to be. So let's say after you pay everything, it's $500, and then you put $25,000 in. So that's what, $6,000 a year. The $6,000 a year. So $6,000 divided by $25,000 is, I need a calculator right here, because the $25,000 is what you put in. That's 24% return. Now, if you find a property that's 24% return, God bless you. That's good. But that's what the ROI is. It's a return on the money you put in, not the total price on the property. Somebody else is paying for the property. You're just worried about the return on what you get. But still the same rules apply if you pay cash. The property value is going to go up, so you're going to make money there, and you're making money on the cash flow. So you're still making money. Don't be sitting there looking, oh, I got to pay off this whole property again before I go. No. The reason why I say the first 5 years suck is because you're using all your energy and effort to accumulate. Hey, baby, can we go to the club? Oh, hell no, we got to get back to this money. Hey, can we go on a trip? Hell no, we got to get back to this money. So the first 5 years is a lot of no. And then you accumulate. And then after year 5, after you done built up that nut, and then now you can see, oh, I can refi and go do that. I can refi this or get a home equity line of credit from a couple of these rental properties because, of course, it appreciated. Of course, the rents then went higher. Of course, you got the cost lower. And then I can go get the forever home that husband, wife, family, friends wanted. I can go do that. And then they're still paying for it. So the money is always there when you buy an asset. And it's the same thing with stock market. You buy a stock, everybody look like, oh, it paid dividends. How many dividends do I got to get before I get my money back? No, your money is still there. You can click the sell button and take that money anytime. You can borrow against the money that's there. I was looking at a Hormozi video, and then he said he got like 100 or 15 million in cash. And then people looked at him and said, are you crazy? And he said, my next thought process is I'm going to just get into a dividend index fund. And then I'm just going to, when I do a deal, I think it was 150 million. He said, when I do a deal, I'm just going to borrow against it, not sell. I'm going to borrow against it and have the dividends pay back my loan. The asset is the thing that's the money, not the money. Because if you had the cash and he spent the 150 million or the 15 million, whatever number he said, then the money's gone. But he can put it in an asset, borrow against it, have dividend income against it. It appreciate over time. So he's making money in 3 ways, just like that. So I had to bring that up because I forgot all about that. But when the gentleman said that when I was over there in Japan, I was like, man, I remember I had that same thought process. But I forget unless somebody say it. That's why I always say ask questions, say anything, because that is something that is very, very a thing that hindered me, because it stopped me from buying real estate for years because I damn sure didn't know it. But I forgot all about it. I didn't know it. What else we got here? All right, Cindy. I think that's Cindy. What happens if there's losses from maintenance? How can that be flipped? I'm not sure. Are you talking about losses from maintenance on a property? I think she's saying losses for maintenance on a rental property. Well, the thing is, so of course you're gonna have depreciation from the asset itself. You're gonna have the depreciation from the asset, and then you're going to, of course, when you do the taxes, you're gonna count all your expenses against your rents, and then like, so let's say it comes out to a loss. The depreciation shouldn't put you at a loss, but let's say it comes out to a loss. And then it's a loss against what you have coming in on different avenues. So let's say you got another rental property that's profitable. You get to write off some of that against the other profitable rental. So that's how that works. Any other questions out there? All right. Well, we still didn't hit the hour mark. We just hit 40 minutes, so that's good. So, Cindy, I hope I answered that question for you. But yeah, so you can still write it off just like anything else. And speaking of write-offs, When you have a rental property, 100% of what you do for the rental property is a write-off. 100% is a write-off. Not 30, 40%. Again, I said for the property. I'm not talking about going out to lunches and dinner or traveling. What you do for the property. So insurance that you pay, 100% write-off. Property tax you pay, 100% write-off. All the maintenance you pay is 100% write-off. So y'all take that for what it is. So it's not like when you do something for your home and you don't get no write-off. Everything that you do for rental property is 100% write-off. And with the big beautiful bill, 100% bonus depreciation has come back. 100% bonus depreciation has come back. So what does that mean? What that means is if you go buy an apartment complex, you can depreciate 100% depreciate that asset in the first year, and you can have a big reserve to write off anything else you got going on. So, but 100% bonus depreciation is back. I believe before the big beautiful bill came, it was down to 75%. It was at 100% during COVID, but it is back. I believe for the next 4 years, it is back. So take advantage, take advantage, take advantage. But yeah, but with all that said, y'all have y'all Friday back. I gave you about 19 minutes back for y'all that's watching. Thanks for joining in. Please like, subscribe. Please look at the Wisdom Whiskey and Wit channel. Please like, subscribe that channel also, because he's doing big things over there. And then again, I'll be on there. So we'll see what crazy questions he have coming up for me. With all that being said, y'all have a good one, and I'll see you next week. And don't forget, the long form comes out on Wednesday. So please check that out also. Have a good one. Wait. Just when I said have a good one, I just seen another question. Do you suggest managing your own property or contract it out? Okay, I see what he said there. All right, do you see, and now look, I was just about to go. Do you suggest managing your own rental property or contracting out? It depends on what time you have. It depends on what time you have. Yes, do property management cost? Yeah, but once you start building out a portfolio, and this is just me, I do, the first 2 rental properties I have, I personally still manage them till today. And the only reason why is because they are right around the corner from me, and it's the same tenants that I had since I bought the place. Now, if let's say these tenants move out, I probably will hire property managers for them, because I just don't want to deal with a new tenant every day-to-day activity. But it just depends on your time capacity you have. Me, I believe I'm so aggressive on a deal, and I get so low of cost on a deal that when I'm underwriting a deal, I factor in property management when I'm buying a deal. Because I don't want to deal with the day-to-day calls, especially when your portfolio start getting bigger like mine is. That's 60, 70 people calling you at one damn time, and you're like, oh, hell no. And they can call you at any time, no matter where you at, and I just don't want those phone calls. But if you got the time, energy, and effort, and you want to do it and save that 8, 10% that you'll get from paying a property manager, go ahead, go for it. I don't know who Saffron is, but LMM, I hope that answers your question on that front. All right, now I'm going to get out of here, but we still gave you time back. With all that said, y'all have a good one, and then I'll see you next week. But don't forget, the long form come out on Wednesday, shorts come out every day, and Whiskey, Wisdom, and Wit.